Welcome to the Lever Trades podcast, where we take a deep dive into both foundation and advanced educational trading concepts. This video is not intended to provide investment advice. All content and opinions shared are for informational and educational purposes only. Trade at your own risk.
Hey everyone, welcome back to the deep dive, where we really get into the weeds on, the stuff that matters. And today we're diving into a tool, something that, I think a lot of people hear about, used by institutional traders, but that can really help, anyone understand market movements in a much, much deeper way. We're going to be talking about anchored volume weighted average price, or, most people just call it AVWAP.
Yeah, for sure. AVWAP, it's one of those things, it's really interesting because it's, definitely a tool that that the pros use, but the concept itself is something that, really anyone can wrap their head around. And I think once you understand it, it can be really, really powerful.
So let's, I guess, start breaking this down a little bit. Now, a lot of people listening have probably heard of, volume weighted average price, VWAP, right? So, kind of the average price that a stock has traded throughout the day, taking into account, how much is actually being bought and sold, those different price points.
Exactly.
Okay.
Yeah, so VWAP, it gives us that kind of overall picture of the average price weighted by volume, which is key, right?
Yeah.
But AVWAP, it takes that concept and it says, okay, instead of looking at the whole day, what if we want to zero in on a specific event? So instead of the average price for the entire trading day, we're choosing our starting point.
Yeah.
Like, we're dropping an anchor.
And that starting point can be anything.
Pretty much. Yeah, I mean, it could be like a company's earnings announcement, right? Or maybe there's some big news release, or even like if a stock breaks out above, a key resistance level that it's been struggling to get past, that could be your anchor point.
Okay, so instead of looking at the entire day, you're saying, all right, something just happened. Let's see how the price action unfolds from this point forward.
Exactly. It's like instead of the wide lens, we're zooming in and we're saying, okay, how did the market react to this specific catalyst?
I see. So it's almost like, we talk about, reading the tape and, trying to understand what other traders are doing. This is almost like we're looking for the footprints, right? We're looking at where the volume is in relation to this event.
Yeah. You got, like, instead of just looking at did the price go up or down, it's, well, how are people actually behaving? Like, how are they reacting with their money, to this new information?
So we're talking about, a company comes out, they have a great earnings beat, right? Everyone's excited, or, maybe they come up with a disappointing product launch. AVWAP, in a way, can help us see, like, is that initial excitement or disappointment, like, is it actually translating into real buying or selling pressure?
Exactly.
Not just hype.
Exactly. Yeah, it's like, is there real conviction behind that move? And AVWAP, it kind of acts as a filter for that.
So I'm starting to see why, this is something that, I'd imagine a lot of professional traders are using this. It's like having an extra layer of information beyond just, the price going up or down on a chart. But before we get too far into, the specifics of like how to calculate this thing. So I got to be honest, I'm not a quant, right? I'm a podcast host. I saw the formula. I was like, yeah, I'm good.
Right.
But before we get there, why don't we take a step back and just talk about like why this even matters to, the average person who's listening to this, who's, maybe just getting started in the markets.
Yeah, absolutely. So I think the big thing with AVWAP, right, is it gives you a way to understand the market's behavior in response to similar events in the past.
Yeah.
So, like you said, if we see a stock and it consistently trades above its AVWAP after, they come out with positive earnings, that tells us something.
Right.
It's giving us some historical context to interpret those price movements.
It's not, it's not a crystal ball, right? Past performance doesn't guarantee future results, but it is like, if you were a detective and you were trying to, solve a crime, you want to look at past crimes, right? You want to see if there's a pattern.
Exactly. You want to see, okay, under these circumstances, this is how things have tended to play out.
Yeah. Okay. So we've established, AVWAP, it's a powerful tool, right? It can help you understand market psychology a little bit better, maybe even, identify some potential trading opportunities. But let's demystify the calculation a bit because, like I said, when I first saw the formula, I was pretty happy with my career choice.
Yeah, I get that. It can look a little intimidating, but honestly, it's not as bad as it seems. Remember, at its core, AVWAP, it's still just a weighted average price, just like VWAP.
Yeah.
The main difference here is that we're narrowing our focus, right? We care about the period following that specific anchor point.
So, like, if I'm let's say I'm anchoring to, like we were saying, a company's most recent earnings announcement. We're basically saying, okay, what's the average price the stock has traded at since they made that announcement? But, and this is key, we're giving more weight to those periods where there was more action, right? Where more shares were actually trading hands.
Exactly. Yeah, it's like we're not just looking at the price by itself. We're looking at the price, in the context of how much conviction there was behind those moves.
Okay, so it's about identifying those periods of real buying or selling commitment, not just, a few random trades here and there, but okay, this is where the big players, the institutions, this is where they were actually putting their money to work.
Exactly. And, I know we talked about the formula a little bit, and, it does involve, summing up like the price times the volume for each of these periods and then, dividing by the total volume. But honestly, you don't really need to get bogged down in the nitty-gritty of all that, right? The important thing is to understand, conceptually, what that line on the chart represents.
Right. So less about the math, more about the story, the narrative that the line is telling us. It's almost like we're taking a magnifying glass to the chart and we're focusing on that specific event and we're saying, okay, how did the market react?
Exactly.
This is already pretty cool, but I'm guessing it gets even better, right? Because we're not just talking about looking at a single line on a chart by itself. We can combine this with other stuff, right?
Oh, absolutely. Yeah. AVWAP, it really shines when you start combining it with other indicators.
Yeah.
Some of the stuff we've talked about before, like moving averages, for example. So let's say, you're looking at a stock, right? They just had their earnings announcement. Let's say it was a positive announcement. And you see the AVWAP line, and it's sloping upwards. But then you also look at, let's say a short-term moving average, and it's also sloping upwards, and the price is consistently staying above both. That's a pretty strong signal.
Right. It's like getting confirmation from a friend, right? If you're seeing the same thing from multiple angles, you can be more confident in your analysis.
Exactly. Yeah, it's like, one indicator might give you a hint, but when you see multiple indicators lining up, that's when you start to really pay attention.
Okay, so we've got moving averages. What else? What else can we throw into the mix here?
Well, we can take it even a step further, and we can start incorporating indicators like, the relative strength index, right? So RSI.
Yeah.
Now, RSI, it's basically a way to measure, has the price been moving too far, too fast? Is it getting overheated?
So it's telling us if the stock is kind of, due for a breather, like it's been running too hot, it needs to cool off a bit.
Exactly. Exactly. And that's where it gets really interesting with AVWAP because, let's say you have that same stock, right? Trading above its AVWAP, everything looks great on the surface. But then you look at the RSI and it's flashing, overbought. It's like, okay, hold on a second.
Even though the buyers are technically still in control, right? Like it's still above that 80 WAP line.
Yeah.
We need to be a little bit careful here.
Exactly, because the momentum might be shifting. It's like, that car that's been, running at red line. It might still be going, but it's probably time to ease off the gas a little bit.
I like that analogy. That makes a lot of sense. But, okay, we've been talking about, all the great things about AVWAP, but I think it's only fair that we talk about some of the limitations as well, right? Because no tool is perfect. So what are some of the, potential downsides or pitfalls that our listeners should be aware of?
Yeah, you're absolutely right. AVWAP, it's great, but it's not a magic bullet. I think the biggest thing to keep in mind is that it's inherently backward looking, right? So just like regular VWAP, it's based on what's already happened. The prices, the volumes, all that's in the past. It can give us clues, but it can't predict the future.
So don't go betting the farm just because the stock is trading above its AVWAP. We still need to be using our brains, right?
Exactly. And, related to that, one of the big things with AVWAP is you got to make sure you're choosing the right anchor point.
Yeah.
Like if you're anchoring it to, some random event that didn't actually move the needle, then the signals you get from AVWAP aren't going to mean much.
Right. It's like, if a company comes out with their earnings and it's basically what everyone expected, like no big surprises, analysts weren't shocked or anything, AVWAP's not going to tell us a whole lot in that situation because there wasn't a big shift in sentiment to begin with, right?
Exactly.
Okay. So choosing the right anchor point, that's key. What else?
Let's see. Another thing to keep in mind with AVWAP is that it tends to be a little bit less reliable in situations where you have really low trading volume.
Because it's volume weighted, right? So if there aren't a lot of shares trading hands, those numbers can get skewed pretty easily.
Yeah, exactly. I mean, you might have a few institutions, putting through some big orders or maybe some high frequency traders, and it can make the AVWAP look more extreme than it really is.
It's like trying to draw conclusions about, the entire population of the Earth based on a survey of 10 people.
Yeah, exactly. Like the sample size is just too small. So it's important to, be aware of that, especially if you're trading, stocks that aren't very liquid.
Okay, so we've covered a lot of ground here today. We've talked about what AVWAP is, how it works, why it matters, some of the things to watch out for. For anyone listening who might be, feeling a little bit overwhelmed, what would you say are like the key takeaways about AVWAP? Like, why should our listeners care about this?
Yeah, I think the big thing with AVWAP is that it gives you this like extra dimension, right? And it's a different way to look at price movements. And specifically, to see those movements in relation to something that actually happened, right? Like an event. Because it's not just, did the stock go up or down? It's okay, the company just announced earnings and now we can see how traders are reacting to that news. And I think that's really powerful.
It's like instead of just looking at the chart and trying to, guess what other people are thinking, we're getting a glimpse into like their actual behavior. You know what I mean? Like we're seeing the footprints in the sand.
Exactly. Exactly. And I think the beauty of AVWAP is that, yeah, you have all these institutional traders, they're using, fancy algorithms, high frequency trading, all that stuff. But the concept itself, it's not that complicated. Like anyone can understand this.
Yeah.
And they can start using it in their own trading.
Knowledge is power, right?
Yeah.
And in the markets, well, the more information you have, the better.
Absolutely. So, for everyone listening, here's a little homework assignment for you. Think about a stock you've been watching, or maybe a company that you're thinking about investing in, and then think about something that's coming up that could potentially move the stock. Maybe they have an earnings announcement or, a product launch, or maybe there's like a big industry conference or something. Now ask yourself, how could understanding AVWAP around that event, how could it give me an edge? Could it help you, interpret what's happening in the market a little bit better, maybe make a better decision about, when to buy, when to sell, when to just sit tight? Keep that in mind as you're navigating the markets, and who knows, maybe it'll lead to some profitable insights.
I love it. Great advice to end on. I know I'm going to be, putting AVWAP to good use in my own trading. And for everyone listening, if you want to, keep learning about all this cool stuff, make sure to subscribe to the show. We've got a lot more deep dives coming your way. Until next time, happy investing, everyone.